If you're watching this video, it's likely that you or someone you know has received or expects to receive a letter from HMRC about undeclared income. Now, typically that relates to online income, such as from the online platforms, much like eBay, Amazon, Vinted, and now even TikTok. So over the past 3 months, we've helped hundreds of people resolve audits surrounding undeclared online income. And so in this video, I'm going to outline some of the key considerations to help you navigate the situation in the best way possible. So let's start with the reason why. Why now from HMRC? Why are they sending out these letters? Well, ultimately, they've launched a big campaign to get people to declare their side hustle and online income. And that's because they feel there is a large amount of tax that's owed. And traditionally, it's not really been clear to people that they should be declaring income, such as that from selling on eBay, let's say, or selling on Vinted. So the reason why you have received a letter or expect to is because your name, your national insurance number has been linked to an online platform account, and HMRC can see all those sales transactions, and the transactions are large enough that they feel there is tax owed. Now, whether that's the case or not, on the face of it, they believe that there is a potential business running in terms of a sole trader business or a side hustle. And HMRC, they want what's owed to them. So the plan from HMRC is by issuing these types of letters, people will begin declaring all the historical income over several years in a lot of cases when it comes to things like eBay or selling on Vinted or whatever it might be. And then they want people to understand that if they're going to continue to sell online and turn a profit, they need to be declaring that profit. And that's usually by way of a self-assessment. That gives HMRC on an ongoing basis a clear picture then of any profit that's declared, any expenses that's associated with the kind of operations. Now, the problem with this letter is that HMRC aren't asking you to submit a historical self-assessment. They're saying, look, just give us data. Just, we've got access to the online platform account. So you now tell us, what are expenses, what's personal and everything else. So the issue is that leaves a lot of exposure for the person receiving a letter, because HMRC are really looking at the person as this is a potential business, a side hustle. They are running they are turning a profit. And so all they have access to is the sales data. So they can say you sold X, Y, Z. But what then you need to provide is your bank accounts, your statements, your receipts, all associated expenses running that, let's say, eBay account. And then there's items that are sold for personal, because a lot of time people, they might be selling something for a profit. They might have picked up something from a car boot sale, but they've also cleared out the loft, and there's a lot they've sold in the year. And so where it falls down is if people aren't able to give that kind of clear data, then HMRC are likely going to have that inflated kind of profit number. And depending on your tax position, that could really lead to a huge tax bill. So you really have to be thorough. Now, when you look to give intent to declare to HMRC, you need to make sure everything's watertight. And if they aren't, and there are holes in, let's say, expenses, the purchases of stock, you haven't got receipts, I'd certainly always suggest either reaching out to someone like us so we can give you specific advice based on your situation and the best approach. When it comes to the personal item side of it, of course, it's a lot more difficult because you may have owned it for 4 or 5 years. Again, having an explanation, having the back kind of footing in the story will really help you out. We handle the process differently from, let's say, how HMRC would deal with it with yourself. And in a lot of cases, the process that we go through and we're comfortable handling is submitting historical self-assessments, which in many cases is good practice because it's following the formal process of going about it. And then we would treat it like we would any other self-assessment. So it ensures both compliance from your point of view, tax efficiency, which is huge, so you're not going to be overpaying tax. And then it's in a format that HMRC then are very comfortable with and can understand. Now, we put together kind of a snapshot table on your screen now, and it kind of gives you an indication of, when you'll be absolutely fine to tackle things yourself and work with HMRC, given the data that they're going to request as and when it's might be worth just reaching out to a professional like ourselves to then act on your behalf and see it through to resolution. Of course, there is nothing stopping you from just kind of reaching out and asking the question if your circumstances are a little bit more complex Hopefully, you're now in a better position to understand how to best react to the HMRC nudge letter than you were before watching the video. If so, please like the video and subscribe, and we will see you in the next video. Take care.